Okay, let's talk August 12th, 2025. A really fascinating day in the markets, right? Global markets seem to be almost holding their breath. Our mission today, as always, is to take this stack of sources. We've got articles, research, our notes, and pull out the crucial bits for you so you get the insights without drowning in data.
Yeah, it was a textbook example, really, of market divergence and anticipation. We're going to break down how these strong global positives were sort of pushing against some pretty significant domestic worries, especially in the U.S. It's interesting how they pulled in opposite directions.
Right, let's unpack that split then, because you had Asia and Europe doing quite well, soaring even, while U.S. stocks were pulling back. What was behind that U.S. caution?
Well, the caution in the U.S. was palpable. You saw the big indices, the Dow, S&P 500, NASDAQ all slipping, giving back some recent gains. I mean, the NASDAQ had just had a 1% jump, hit a couple of record highs recently. The S&P was up 0.8%, Dow 0.5%. And it wasn't triggered by any specific bad news that day. It was this deep anxiety about the upcoming U.S. Consumer Price Index report for July, this fear of what people were calling tariff inflation. The idea that trade tariffs could push prices up was really looming large. Markets were just waiting.
Yeah, that makes sense. But then you contrast that with, like you said, this almost celebratory feeling elsewhere. Japan's Nikkei surged 2.2% to a new all-time high, 42,718. And Vietnam's VN index also hit a record. London's FTSE 100 was up too. What was lighting the fire there? How did that outweigh their own issues, like the UK's sluggish job market?
Yeah, the immediate trigger was the U.S. extending the trade truce with China for another 90 days. For economies heavily reliant on exports, like many in Asia and parts of Europe, that kind of geopolitical relief was just huge. It outweighed domestic concerns. So it really highlights how different markets weigh different factors. Geopolitical stability trumped immediate domestic economic data for many.
Interesting. So moving beyond just the stock prices, there were these bigger macroeconomic shifts and geopolitical moves playing out behind the scenes, right?
Absolutely. You had, for instance, the Reserve Bank of Australia making a surprise move. They cut their main interest rate, the cash rate, by 25 basis points down to 3.60%. That was their third cut this year. They pointed to progress on inflation, but importantly, they also flagged concerns about global uncertainty and specifically trade policy. So easing, but with a wary eye globally.
Right. So the RBA acts, but the big suspense still seems to be that US CPI number. Why was that specific piece of pending data the elephant in the room for basically everyone?
Because everyone saw it as the potential market mover. The forecast was for a slight rise year over year to maybe 2.8% for July, but the actual number could really dictate what the Federal Reserve does next with monetary policy, especially with all those whispers about tariff inflation. One number setting the direction.
Okay. And shifting gears a bit to geopolitics beyond the trade truce extension, there was another deal that kind of popped up, catching people off guard.
Yeah, President Trump announced this AI chip deal. Essentially, U.S. companies like NVIDIA and AMD could sell certain advanced AI chips in China. Chips may be more powerful than previously allowed, but the catch was they'd have to pay a 15% share of that revenue back to the U.S. government. And you saw tech stocks jump almost immediately. Apple was up over 4% after its CEO met with Trump.
But this deal wasn't without its critics. There was a controversial side to it.
Definitely. Concerns were raised pretty quickly. Chatham House was one voice here. The worry is that it blurs the line between national security and economic goals. It kind of sets a precedent, maybe a dangerous one, where companies might feel they can just pay their way out of export controls. And that could really damage U.S. credibility with key allies, like the Netherlands and Japan, who are absolutely crucial for making any export controls actually work effectively. It's a big shift.
Monetizing national security controls.
Yeah.
That is tricky. And just quickly, another geopolitical note influencing things there was talk of the upcoming Trump-Putin meeting on August 15th about the war in Ukraine.
Yes, that was also in the background, contributing to a bit of a rise in oil prices, anticipating potential outcomes, or just increased dialogue.
Okay, so that brings us to crypto. Bitcoin often feels like its own world, but it seems increasingly tied into everything else now.
It really does. Bitcoin was sitting around $116,900 then. Yeah. Analysts were calling it a make or break point. You had some bullish technical signals like support from the 50-day EMA, that's the 50-day moving average price, but also some bearish patterns like a double top and a shooting star, which often suggest a price peak.
So a mixed picture technically. What was expected to drive its next big move?
Well, just like the U.S. stock market, its next move was seen as heavily dependent on that exact same thing, the U.S. CPI data. And you could see the integration happening in corporate news, too. Metaplanet bought more Bitcoin, taking their total up over 18,000 BTC. Marathon Digital, a big miner, diversified into AI, and the crypto company partnered with Anchorage Digital Bank, bridging traditional finance and DeFi. So yeah, Bitcoin's definitely not an island anymore. It reacts to these big macro events and corporate plays.
Got it. And briefly, other commodities, gold and oil.
Gold was down a bit. As a typical safe haven asset, easing geopolitical tensions from the trade truce likely reduced its appeal slightly. Oil, as we mentioned, edged higher, partly anticipating demand, partly reacting to that upcoming Trump-Putin meeting news, commodities acting as that real-time sentiment gauge.
So wrapping this up, what's the main takeaway for you from digging into August 12th, 2025? It really was a day of contrast, wasn't it? Anxiety, relief, all interconnected.
For me, the big picture question it raises, especially with that AI chip deal, it's about this increasing entanglement of national security and economic goals. When you start allowing companies to essentially pay for exemptions to security-related controls, what does that do to global trust, to innovation? How do you balance wanting a strategic edge with the need for collaboration, especially with allies? It's definitely something to mull over.